navigating scalability, optimizing crypto payment platforms for high-volume gaming transactions.
Thank God I'm not a TV host, otherwise the program would long have been cancelled due to operational reasons. So welcome everybody, and today's afternoon session is about the optimizing crypto payments platforms for high volume gaming transactions. This is naturally a wide topic. Why is it interesting? Because a lot of people don't know that stablecoins originally was something that the gaming industry was pushing for the sake of avoiding chargebacks on credit card transactions. So whether a lot of people like to hear it or not, beyond something like Bitcoin, stable coins are actually, from an inception point of view, invented by the gaming industry as the main adopters of that. So for this afternoon session, I have with me Fiorentina Di Amore. She's the CEO of blockchain.com in Malta and handles their business development operations for the EU. I have Anna Schulz, who's the COO of FinchPay. I have Alice Konevko, who's the director and CEO of Inductive. And I have Christopher Wilson, who's the founder of Radom. The topic we're going to run over, we will jump right into it because I see we're also a little bit off on time. So let's understand high volume transactions. People say blockchain, TPS, transactions per second. How is that going to work for something like the gaming industry if we start with somebody like FinchPay and you, Anna? Why is it that you guys feel that, how do you try and boost the business whereby you can handle the number of transactions that come from the crypto-related payments?
Actually, handling transactions that are coming from crypto payments is what we do. And we focus a lot on the usability and acceptance rate. And this is actually the key metrics for us of how we understand scalability and, basically flexibility in this case. So I would say choosing the right partner to process payments in crypto is very important because the market is flooded with different payment methods, especially crypto providers. But if you try to dig a little bit deeper, you would understand that there are many differences. We ourselves, we are focusing a lot on the usability, as I said earlier. So let's say we recently this year introduced some features on top of this, these ones which are actually the market standard, accepting as many currencies as you could. We accept 200 different cryptos, allowing merchants to choose their flow, and let's say traditional casinos, they normally want their crypto to be exchanged into USDT because they don't want to deal with the market fluctuations. But crypto casinos, for them sometimes it makes more sense to not to convert anything at all and just to store assets as they come. Users, they want static addresses to top up their accounts so they can whitelist them anywhere. And also some little features like accepting user mistakes, for example, when they send the wrong asset, like Tron instead of USDT on Tron, or USDT on one chain instead of USDT on another chain. That it could be done automatically. I mean, to some extent, there are some limits. So it's very important to focus on that and to ease the crypto top-up flow for users.
So if we take that as an example, you're a payment business. If we then move over to a, let's say, historically natural crypto exchange like blockchain.com, how do you feel that you're able to scale this industry considering the change in legislation, implementation of MiCA? I had your colleague from the compliance side of blockchain.com here earlier today. How do you see that growing considering the legislative elements? For instance, Anna was talking about USDT in the MiCA region. Tether, the company behind USDT, decided not to comply with the requirements of MiCA, so USDT is not allowed currently in the Eurozone. How do you plan to scale the business for, let's say, lots of volume going forward?
So first and foremost, one should understand that
Please hold your microphone a little closer.
Like that? That's better? Okay. First and foremost, one should understand that MiCA is a friend and not a foe. And of course, it helps build the much needed trust in the industry in general. When it comes to large payments, when it comes to mass payments, it's always the same problem. And it is always the same challenge. Speed versus safety versus a good result of the payment, because sometimes payments can fail. All this translates in one word: basic operational architecture. The way you scale your business, the way you change sometimes your business model, because it's a new need in the market. We are firm believers in a collaboration between crypto and the gaming space, because they solve each other's problems. Fast payments, of course, instant, cheaper payments, which are a competitive advantage in gaming because, of course, they allow for immediate withdrawals of clients' winnings. When it comes to scaling, it's very important to build an infrastructure which is architecturally designed for scaling the business from the inside out. Our personal strategy is to actually build each and every process, each and every layer of the IT and also of the PayOps architecture independently from each other so that they can scale alone.
Well, let's take that as an example, moving over to the payment provider side. So you're a crypto exchange as such, you often need a PSP or an EMI on the other side to undertake the actual fiat transaction in or out. How does that work if we then look at somebody like Inductive, Alex? How do you guys scale that side, for instance, in cooperation with a crypto exchange, or if you have the infrastructure in-house?
Yeah, I think that's a really important part of the ecosystem where we at Inductive, a confession, we're not a crypto provider, so many of you are probably thinking, what's this guy doing on stage? But we are a very big part of the gaming ecosystem. Over half our clients are involved in gaming one way or another. And what's really important for them is being able to do the on-off ramping and have the trust in the fiat side of the business can work in harmony with the crypto. We believe, and we've seen it, I think, from many of our clients speaking to us about where they see the adoption of crypto being critical for their business models going forward, is not necessarily about how quickly they can adopt the technology, how they can implement it in their own systems, because there's lots of very smart people, I think, that can give good guidance and good advice in this area. Where they have the biggest fear is the ability to off-ramp and turn crypto back into fiat, because there's still a huge demand and need to do that, particularly when they're plugging into the mainstream payment architecture and payment rails. So I think that's where there's this healthy tension between crypto and traditional currencies on what's the best, what's the most efficient way of doing things. And in reality, it's a coexistence. It's got to be about both of them living in harmony and building trust between each other, the sort of the mainstream traditional banking rails versus the new alternative payment methods. It is the future, but not necessarily one replacing the other, that both coexist in a way that's trust and harmony works between them.
Well, that's an interesting model, right? Because we've got somebody like Fiorentina, who is with blockchain.com, which is a very famous native crypto exchange in its own right. You're purely on the fiat side. You don't top the crypto side. We've got somebody like Anna, who is, straddling both sides of it. Christopher, how does somebody like Radom then play in this whole ecosystem? What makes people choose you over one of these providers here on stage? What is that you guys do differently? Or you do cheaper, better, slower, faster, worse?
I mean, I think from our perspective, we provide, a very wide range of services. Also from a licensing perspective as well, we were very, very early getting licensed as a crypto exchange, and we're currently going for the full MiCA license right now, and also applying for payment institution license. So I think a lot of it's based on trust, but also like very, very wide product set that we have. We are a technically led team. The company was founded by technical people who had previous engineering experience within sort of San Francisco-based companies. So that's always helped us. In terms of pricing, I mean, it's always going to be a factor. but trust and a very, very robust product and having a lot of redundancy, especially when you kind of going outside of just pure core crypto payments, and you're looking at the banking side, having a lot of redundancy is always going to be a big, big thing, especially when we're talking about the sort of higher risk segments like our gaming.
So somebody like Fiorentino was talking about the architecture, which is naturally the technical side of things. But for most, let's say, merchants, end users, it's about, the money side, the commercial side. And many industries have the tendency of having a significantly dropping cost base as volumes go up. It's a classic supply-demand cross curve. So the question is, how many providers are there space for if volumes go up significantly but costs drop to more or less zero? Spending some time here with my colleagues on the floor today, I've learned about various providers who, for one side, for instance, people who are providing the on-ramp, they will basically do the entire flow for free. There's no cost. So is it becoming an ecosystem that commercially starting to eat up itself because competition is so fierce that it's becoming a race to the bottom? Or how do you see that, especially if we have businesses that only provide the fiat side, businesses that only provide the crypto side? How do you see that? Anna?
This is a very good question. And you're right, there is a lot of competition. But the key actually to take a piece of this pie is to know who your clients are, to know their behavior and cater to their needs, let's say. So not all the providers, not only casino providers want to off-ramp crypto, let's say, first of all, but they want to be able to process user transactions as fast as possible. And for that, your system should be truly scalable, because when you cater to millions of users and you facilitate transactions from millions of casino players, you have millions of addresses as well that you need to monitor constantly in order to detect deposit on time, let's say, almost simultaneously. And also withdrawals. That you need to process thousands of withdrawals per day. You need to have a solid infrastructure for, you need spenders. You need to make these processes in parallel. For some casinos, this is one of the pain points. Another could be just the liquidity management and liquidity flow and how flexible crypto casinos are. Because again, now the popularity of crypto casinos are rising, so crypto providers need to have possibility in the back office to, to handle all this liquidity, to exchange one asset into another.
That's the operational side. I think much more, if we look at it realistically, also from what I've learned from speaking to law enforcement, Europol, Scotland Yard, the biggest challenge I actually see is not the technical side, it's the compliance side. Because you will get so many false positive KYT alerts. How are you going to manage that? Fiorentino, you sound very knowledgeable on the technical side. How do you imagine that the industry as a whole is going to handle this? Let's just say it's not only for gaming, but it's across the board. Let's say supermarkets start accepting, crypto payments for tabs, stuff like that. How do you see that?
So once again, it's about building, having the right tools for the right business. You cannot go on the moon with a bicycle.
Right, but the KYT regime we have today, KYT, know your transaction, is naturally based on that there is an ability to track back the previous transactions. But the question is this a model which is fit for a lot of transactions? Because let's say, for instance, I am a clean actor, but there are suddenly some dodgy transactions that are happening on my account. Does that automatically make me bad, or is that because I'm, for instance, being dusted in my system? How do you see that?
It's about profiling. So as Anna said correctly, the more you know about your client, the more you can profile him, the more you can predict his behavior in terms of transactions, and the less you're going to have false positives, because you know what to expect from a specific client. In order to have that, you need to invest heavily in systems that automate that and embed all the technology or that intel into the transaction live, because you cannot stop a transaction from happening and then doing a check afterwards. It would be extremely useless.
So Alex, for somebody like Inductive, where do you feel the risk is the highest? Is that on the on-ramp or on the off-ramp side in terms of the money that's being sent and then people want to move it into crypto? Or is it the other way around? And how do you handle that as a business, especially as the number of transactions go up?
It's a good question, and I've heard both sides of the debate in terms of risk versus on-ramp or off-ramp, which is the area of concern. I think really it comes down to the partners you're working with, because as we were just saying there in terms of the example of how do you get the KYT tools to work effectively, these are no different to the conversations you have on the fiat side of things in terms of how do you make sure you don't have excessive amounts of false positives and you're using the tools in the right way. The key to mitigate those risks always comes down to the quality of data and the level of data you have at your fingertips, but also what tools are available now to use the data in the right way. And we know the power of AI and the possibilities that can support people and businesses in terms of filtering through the noise to get to what the real risks are. And I think that's where it comes back to having those partnerships between the provider, the exchanges, that give the confidence that the tools that are being deployed are being used effectively, because that's where the trust is really integral. Because if we go back to the topic of what is the key here, it's about speed of processing. The biggest challenge is that fear of an exchange or a provider effectively being put on stop because the trust breaks down. And that's where all the speed and efficiency and the pricing is essentially academic at that point, because that moment where something is blocked is the worst fear for any provider or operator. So having that trust and being able to plug into different parts of the network, having inbuilt redundancy is where I think this is the key. Whether it's on-ramping, off-ramping, is I think making sure you've got trusted partners in different parts of the ecosystem to manage those risks and risk appetite, because different providers will have different opinions on what is the riskiest part of the ecosystem.
So what's the risk appetite at Radom, Christopher?
I mean, that depends on the industry. I mean, we have to judge things by a case-by-case basis. Obviously, when you're talking about money movement and you're looking at crypto going into fiat or fiat going into crypto, the risk level is much higher, and there's obviously going to be a lot more scrutiny on those types of transactions. It's the same when you look at sort of end consumer payments as well. I mean, the risk level is so much higher. Whereas you do have, at least right now, the trend in the industry is that it is a bit more relaxed when it comes to direct crypto acceptance, especially within iGaming, which is why it has become so popular. But ultimately, you know, the consumer, in many cases, if we look at the majority of traffic, it is still consumers that want to pay by bank or they want to pay by card. Yeah, I mean, it's really dependent on what the flow is. But we at Radom, we always judge things by case basis. iGaming isn't our sort of primary industry, but it's one that we're always open to take a look at.
Anna, you wanted to add something?
Yeah, I just wanted to build up on what just Alex said about the being trusted provider, not to put transactions on hold. Actually, we faced another side of this. I mean, we all know like MiCA regulation. It's like more or less clear what we should do to be like compliant with everything. But normally casino operators, they cater to more countries than just Europe. So they cater to Asia and they have their own regulation as well. So the problem that we faced is that, let's say, our addresses from where we issue withdrawals to users and where we receive deposits, they should be marked in the majority of like centralized exchanges and like blockchain information exchange services, let's say, and IML scoring systems as well, in order for our transactions not to get blocked on the user side and not to face the prevention from like whatever software user have to make a deposit actually while user is sending this deposit. So this is also a challenge that is very related to the compliance. Yeah.
So please, Christopher.
I was just going to say, it is something that we've definitely seen happen over the past sort of 6 to 12 months, which is when you're looking at the major central exchanges and the major custodial wallets within the space. A lot of transactions are now being blocked, especially when you're talking about centralized custodian-based solutions that are, especially payment gateways, where they're not complying with travel rule or trust protocol in the US, and they're not sort of reporting the sort of KYC data that is collected on incoming transactions. It's then causing a lot of central exchanges to block payments. So it is something that's not just enforced by regulators, but the industry is self-regulating now as well, which is probably for the best.
But it's very funny, right? Crypto was originally supposed to be permissionless, anonymous, decentralized, right?
Nothing is left
Yeah,
out of history left the chat.
You got to follow the travel rule. Everybody's got to be KYC'd, and you're going to understand more or less end to end who's sending, who's receiving, right? What happened to the permissionless setup, Fiorentina?
Let's call it a evolution. So crypto started off, as you know, as the renegade of financial services, as a
cyberpunk.
Yeah, cyberpunk, and also anarchical problem solver, because it bypassed banks completely. Thing is that this very powerful paradigm of technology, being cryptocurrencies, ended up being so much part of everyday life, not just in retail clients, but also in B2B, that they needed to be regulated in order for them to grow. And so from the dark side of being the rebel, it now is one of the most regulated and heavily regulated financial services. I remember back in 2018, there was a fair just like this called the Blockchain Island in Malta. And I was exactly on a stage like this, telling 4,000 people that had flocked to Malta from all over the world that crypto would eventually be regularized. And I almost got lapidated on stage with a lot of boos, because at the time I was in compliance and anti-money laundering, but we knew that Malta was preparing their first world law and regulation around CASPs, VASPs, and obviously crypto. And just 5 years after that, in 2023, I was again on a stage in Malta, talking to a bunch of regulators from the EU about MiCA, about the regulation of crypto. So this has evolved in just 5 years, and I can't wait to see how it's going to be evolving in the future.
Well, I think some of us can wait. We wish that they won't come, but all right. So if we didn't think about this on the commercial aspect, the optimization, the talk about how can the whole thing speed up, there seems to be this patchwork of different providers, as we were talking about, with all due respect. Some are pure crypto, some are pure payments, some are both. What's going to happen in this whole space when the banks, they eventually decide to step into the space? Will they team up and buy a crypto exchange? Will they say, we don't want to touch the crypto side, we'll just do like Inductive is doing and purely handle the payment side? How do you imagine that as businesses? Alex?
I think that's the key question for the future is not necessarily how successful crypto is on its own, but how it brings other people along with the journey. I think there's a really sort of a good data points around the middle of this year when the mainstream started talking about stablecoins in their earnings reports. And the number of mainstreams, the HSBCs, the JP Morgans, the PayPals of the world, all started talking about their own stablecoin strategies, which should be seen as a good thing, because the amount of liquidity, funding, capital that's on the sidelines, or has been sat on the sidelines in this market for the last few years, is incredible. And once it's ready and confident enough to bring that to the market, I think that's where we'll see not just the technology booming and fulfilling its potential, but the actual amount of money that can flow through it will be the sort of real inflection point, I think, for the system. But that's all about trust, because those guys will only come to the party when they have enough trust and confidence that things can be done in the right way. So this move towards regulation and, let's say, some of the taboos that we mentioned earlier when crypto was first dreamt up, we shouldn't see that as a bad thing, because the potential that's sat on the sidelines at the moment, I think, is huge.
What about somebody like Radom, Christopher? Are you going to be bought up by a bank, or are you going to be fighting the waves? How's it going to go, do you reckon?
I mean, that's a good question. I mean, we've definitely seen a lot of acquisitions recently in the space. A lot of companies are getting picked up by larger institutions. So yeah, I mean, when we sort of thinking about traditional finance, it's not really a case of if, like, will they get involved? It's more a case of when are they going to get involved?
Yeah.
And how, yeah. And I think part of it will come from strategic acquisitions. I think another part of it will be a lot of in-house development. I think we probably will see more standardization. We'll probably see even tighter regulation. I know some people are complaining about it already, but it's sort of inevitable. And I will say on your earlier question as well, I mean, decentralized finance still exists. Self-custodial crypto, where people are their own bank, it is still a big thing. But, you know, sure, I'm speaking for everyone in the panel here. We're running regulated financial institutions. You know, we're involved in the payment space. We're not running decentralized exchanges or some type of self-custodial protocol for accepting payments. So in our cases, we've large address structures on chain, and these things do have to be regulated and monitored to, you know, keep companies like us in check, to safeguard user funds properly. So in our case, it's a good thing that we're regulated and that it's getting more heavy, but I don't think that means an end to decentralization.
Time is almost up. Closing remarks. From the industry, we have it today, optimization. Do you think it's going to be a setup like we have today, with classically a one setup where it is the Humpty Dumpty, send the money to the bank account moves it into the crypto side? Is it going to be something else? Fiorentina, what do you imagine from the architectural point of view?
What's sure is at the moment we are living a reality of hybridism, if it's a word, where it's either crypto having their own payment services and EMIs so that they can manage that. And I know that regulators are actually encouraging that. But I also know that this is a world where nobody does it alone. So it's very important where crypto pair up with European banks, European licensed entities, which are EMIs, which are extremely important for the support, and also other entities which are the technological part, that is RegTech, that helps and facilitates the transaction. But of course, it's so much into a moment of evolution, and it's super fast with the, as you mentioned before, Torben, banks, central banks are being extremely interested now in crypto. It was like gaming. It's a phase. It's going to die. Yeah, they're going to leave Malta. And now gaming 30 years on, it's one of the pillars of our economy. And crypto is the same. It's not a phase anymore. Banks and governments are realizing that. Regulators are realizing that. And the European Union has the biggest potential of systematizing crypto like accounts made in fiat. So we are living a period of bipolarity where there's fiat and crypto, but I presume that in the future, in the very near future, there's going to be a merge of that.
Thank you very much. Unfortunately, the time is up. My own prediction is that when you show up here in a few years' time, the number of providers will be reduced by somewhere between 33 to 50% because there will be a massive market consolidation. On that note, thank you very much for being with us today. Thank you.